The US economy is on a tightrope, teetering between recession and inflation woes. As the latest consumer price index, CPI data looms, markets are pricing in stagflation fears. The question on everyone's mind: will prices continue to rise despite stagnant growth? Recent economic indicators paint a mixed picture. Q2 GDP growth slowed to 0.6%, below expectations of 1.3%. Meanwhile, the ISM manufacturing index fell to 52.8, indicating contractionary pressures in the sector. Stagflation fears are rising as inflation remains stubbornly high. The consumer price index, CPI, has increased by 5.4% year over year, with core inflation ticking up to 4.3%. This is despite a decline in oil prices and other commodity costs. One key area of concern is the yield curve inversion, a recession indicator. The 10-year Treasury spread has inverted for the first time since 2007. This has sparked concerns among investors that a downturn may be on the horizon. Economists are divided on what to expect from the CPI data release. Some predict continued price increases due to supply chain disruptions and labor market tightness, while others forecast slowing inflation as energy prices decline. Markets are pricing in a 25% chance of stagflation, according to data from the CME Group. This has led to increased volatility in asset markets, with stocks and bonds both experiencing significant swings in recent sessions. The Federal Reserve is under pressure to respond to rising inflation concerns. With this dual mandate of price stability and maximum employment, policymakers must balance their response to avoid exacerbating economic growth. Ahead of the CPI data release, investors are closely watching key sectors such as food, housing, and healthcare for signs of inflationary pressures. A breakdown in these areas could provide valuable insights into the state of the economy. The stakes are high for this week's CPI data release. As markets continue to price in stagflation fears, policymakers must navigate a complex economic landscape to avoid exacerbating growth concerns.